Hey everyone, welcome back to Corporate Decoder, the place where we decode those dry corporate documents to find the juicy bits. Today we're diving into a report from Twist Bioscience Corporation, and let's just say they are making some interesting moves in the world of DNA synthesis. Stick around because this one has some intriguing elements that could impact the future of biotech. So what exactly is this report all about? Well, it's a Form 8K, which is a filing with the US Securities and Exchange Commission, or SEC, that publicly traded companies use to announce major events. Think of it as a public announcement for big news that isn't part of their regular financial reporting schedule. This particular filing from Twist Bioscience Corporation on the 11th of February 2026 is laying out a significant transaction. The company, best known for its synthetic biology platforms, is entering into some new agreements with investors and another company called Invenra Incorporated. Now, the legal stuff like incorporation state and file numbers, that's standard boilerplate for these reports. What's really interesting is the substance of the deal itself. Twist Bioscience is planning to issue up to 632,328 shares of its common stock. This is a pretty big chunk of shares, and it's important to understand why they are doing this and what it means for the company and its investors. This part of the report talks about unregistered sales of equity securities. Basically, Twist is selling these shares, but not to the general public through a stock exchange. Instead, they are doing it through private agreements. They are relying on an exemption from registration. This means they believe these sales don't require the same level of public disclosure and registration as a typical offering because they are selling to specific investors who are assumed to be sophisticated. This section is where the real action is. It's labeled Other Events and it details the stock purchase agreements, these deals between Twist and certain investors. The headline here is that Twist Bioscience Corporation, or the company as it's often referred to, is going to issue a substantial number of its shares. For context, remember that these are shares in Twist Bioscience itself, so issuing more shares can dilute the ownership stake of existing shareholders if the company doesn't grow proportionally. A significant part of this deal involves Invenra Incorporated. Twist plans to issue up to 324,558 shares of its common stock to Invenra and also pay $5 million in cash. This is in exchange for a license agreement and the transfer of certain technology from Invenra. This suggests Twist is looking to acquire or license key intellectual property or technological advancements from Invenra, which could bolster their own offerings in synthetic biology. That is not all. Twist will also issue an additional 307,770 shares of its common stock. This is to two investors of Invenra in exchange for Invenra preferred stock. This essentially means Twist is indirectly acquiring a stake in Invenra through these investors, and this is to secure an approximate 6% ownership position in Invenra. This partnership indicates strategic alignment and potential future collaboration. On top of the share issuances and technology acquisition, Twist will also get to appoint one director to Invenra's board. This gives them a direct voice in the strategic direction of Invenra and further solidifies the relationship. Following these agreements, Twist is also entering into what are called registration rights agreements. What this means in simple terms is that the investors who are receiving these shares have the right to demand that Twist register these shares for resale to the public at some point in the future. This is a common provision in private placements, and it ensures that the investors can eventually sell their shares on the open market. The filing includes a form of this agreement as Exhibit 4.1. This is essentially a template showing the terms under which Twist will help these investors sell their shares. They are also filing an opinion from their legal counsel, Orrick Harrington and Sutcliffe LLP as Exhibit 5.1. This opinion likely confirms that the share issuances are being handled correctly from a legal and regulatory standpoint. Finally, under Exhibit 9.01, we see a list of documents attached to this report like the registration rights agreement and the legal opinion. There is also something called an interactive data file, which is essentially machine-readable data, making it easier for analysis. Now, all companies include a section on forward-looking statements. This is pretty standard legal language to protect themselves. They are basically saying that some of the information in the report involves predictions about the future, and that actual results could be different due to various risks and uncertainties. They mention risks like changing technologies, competition, and economic conditions. For anyone looking deeper into the business itself, the document points to the company's annual report on Form 10K filed earlier. And of course, the report ends with signatures. This is where authorized individuals sign off confirming the accuracy of the information presented. Judy Yan, Assistant General Counsel and Assistant Secretary, is one of the signatories here. Now let's unpack what this really means for Twist Bioscience. On the surface, this is a significant expansion and acquisition of technology and strategic partnerships. By acquiring licensing rights and partial ownership of Invenra Twist is clearly aiming to strengthen its synthetic biology capabilities. This could lead to new products, faster innovation, and a more competitive position in the market. However, issuing a large number of shares always carries the risk of dilution for existing shareholders. The value of those new shares depends on Twist's ability to integrate this new technology and leverage the partnership effectively to drive future growth and profitability. The fact that they are using private placements and registration rights suggests a calculated move to acquire necessary assets without immediate public market pressure, but it also sets the stage for future potential selling pressure on the stock if those investors decide to offload their shares. The $5 million cash payment alongside the shares indicates the significant value Twist places on Invenra's technology and intellectual property. This could be a game changer for Twist if it translates into a tangible competitive advantage. The company is betting big on this investment and partnership to propel its growth in the rapidly evolving synthetic biology landscape. It will be crucial to watch how well they integrate Invenra's technology and whether the partnership yields the expected returns in terms of innovation and market share gains.